$61.48. That's the number that caught my attention today, December 9th, 2025. Silver prices are climbing faster than anyone expected, and dealers across the country are reporting shortages. Premiums are surging. Inventory is disappearing. If this keeps up, physical silver could vanish from dealer shelves within months. But here's the part that matters. This isn't random. Something big is unfolding, and I want to break it down for you. I'm not a financial advisor. This is purely educational analysis based on publicly available data, historical trends, and patterns I've been tracking for years. My goal is to help you understand what might happen next, not tell you what to do with your money. History has a way of repeating itself, and if we study major silver crises, we see a consistent four-stage pattern. First is the setup. Stability appears normal, but fundamentals are weak. Second is expansion. Demand rises, supply lags, paper markets hide the stress. Third is crisis. Signs of strain appear. Premiums spike, delivery delays start. Fourth is eruption. Prices explode. Early positioned players profit. Everyone else scrambles. Right now, all signs point to stage 3 evolving into stage 4, and we might be watching it happen in real time. Let's start at the beginning. For years, silver has been quietly moving out of circulation. Mined supply is insufficient to meet industrial demand. Dealers are reporting that inventories have been declining steadily. Meanwhile, the paper silver market, futures contracts, ETFs, and derivative positions, has expanded massively, masking the real shortage. On paper, supply looks infinite. In reality, physical silver is vanishing. Historical comparison. In 1980, the Hunt brothers bought 1/3 of the U.S. silver supply. Prices surged nearly 800% in 18 months. Today, the scale is even bigger. The combination of bank accumulation, industrial demand, and paper market leverage has set the stage for a similar shock. Industrial demand is exploding. Electric vehicles require roughly 3 times more silver than traditional cars. Solar panels, 5G infrastructure, AI data centers, and medical technology all rely on silver. Mine production hasn't kept pace. Global reports indicate that supply deficits have persisted for nearly a decade. Above-ground stockpiles are being drained. Dealers can't restock fast enough. Meanwhile, big players, JP Morgan, sovereign funds, and institutional investors have been quietly accumulating physical silver. They know something the average investor might not. Supply is finite, and the gap is growing. Now we're starting to see cracks. Dealer reports show physical silver is running low. Premiums are climbing, sometimes 30%, 40%, even 50% over spot. COMEX inventories are dropping sharply. Futures contracts may not be deliverable if the trend continues. The signs are everywhere. Rising premiums, delivery delays, declining registered silver on exchanges. These are indicators of a market under stress. If demand for physical silver continues to outpace supply, the paper market may face serious consequences. Consider this. In 2020, during the COVID panic, silver coins were selling for 60% over spot. Imagine that scenario with silver already over $60 per ounce. This is the inevitable outcome. If stage 3 pressure continues, prices could explode. We're talking silver hitting $100, $150, possibly $200, if not higher. Early positioned players, including major banks and funds, will profit. Everyone else? They'll scramble to secure what's left. Historical data supports this. Every major silver squeeze followed the same pattern: accumulation, supply shortage, paper market stress, and eventual eruption. The question isn't if, it's when. Short-term catalysts could accelerate the shock. The Federal Reserve meets this week to discuss interest rates. If they cut, the dollar weakens. Historically, silver reacts faster than gold to a weaker dollar. Combine that with the structural supply deficit and rising industrial demand, and the stage is set for a rapid surge. Silver isn't just a metal. It's a gauge of real asset scarcity, industrial demand, and monetary weakness. Gold is soaring, energy prices are surging, and institutional investors are looking for alternatives. Silver is undervalued relative to its historical ratio with gold, its industrial importance, and the rate of money supply expansion. Mean reversion tends to happen eventually. When it does, silver could correct dramatically. And based on current positioning, the move could be swift and violent. Physical silver is still available, but not for long. Premiums are rising and inventories are dwindling. Dealers are running out of stock. If you're watching this market, you need to understand the dynamics. This isn't a future problem. It's happening now. December 9th, 2025. The countdown has already begun. Study the patterns. Watch the numbers. History is unfolding before our eyes. You can follow along and learn as it happens. Or you can look back in a few months wishing you had paid attention. The choice is yours. But the silver supply shock of 2026 is coming, and it may be bigger than anyone expects.